Thanks everybody for spending part of your day with us here at CUCollaborate to talk about rethinking credit union growth, specifically unlocking market expansion opportunities. We are passionate about this topic and excited to share with you what we see in terms of working with our 300 credit union clients on this topic and share some lessons learned. And hopefully, our hope is that you have valuable or tangible takeaways to bring back to your credit union as you think through your current market opportunities and what lays ahead for you. We definitely want this session to be interactive. And so please, as you have questions, put them into the chat here. We've got plenty of time for a Q&A, or we've planned for plenty of time for the Q&A at the end. We'll spend a little bit of time up front talking about who we are in terms of a company as CUCollaborate, if you're not familiar with us, and then Emily and I will introduce ourselves. No market expansion discussion is devoid of field of membership, so we have to touch on that. We are very passionate about field of membership. It's very hard to separate, market expansion in any way without considering field of membership, depending on what charter and type you have. We'll talk about how we see traditional market expansions going across our various clients and how we can improve upon those, specifically as it pertains to bringing software to bear, how it can make you more efficient, ultimately lead to better results, or at least more nuanced results. And we'll demo some of the capabilities in our software. Of course, we we think there's a lot of information here that's valuable outside of our software, and so we'll really use that as a way of illustrating the takeaways or the points that we would have you leave here with. And then, of course, as I mentioned, there's some Q&A at the end. So real quick about CUCollaborate, we are credit union advocates, nerds, geeks, huge fans of the movement. We are a CUSO, and that represents sort of our commitment and excitement about credit unions and wanting you to ultimately succeed and grow your communities. So we empower credit unions to adapt and thrive by leveraging proprietary data and technology alongside deep subject matter expertise to drive smarter strategic decision making. And we hope you'll agree with that after this webinar. Just a few more areas that we choose to focus in, mention growth and field of membership charter expansion. We're fortunate to really be an industry leader and a disruptor in that space. We also have a merger network and focus on SEG or B2B growth in addition to marketing and branding. And so, really trying to empower our credit union clients to continue to thrive and better serve their communities, measuring that performance through analytical tools, benchmarking tools. Branching is a necessary component of expansion, and so helping credit unions grow their branching optimally, and then making sure that we have the right products to pair with all of that. And then finally, we are not-for-profits. We have missions to serve our members, and so making sure that we are serving everyone equitably and achieving the impact and able to talk about and quantify that impact and optimize that impact through analytics, and then also helping credit unions with regulatory relief programs like CDFI and low-income designation. Real quick on who I am, then I'm going to pass it off to Emily, who is going to lead most of this presentation. But I'm Chris Tishu, the Chief Operating Officer and Head of Consulting. Very fortunate to have worked with CUCollaborate for a little over the last 5 years. Spent some time in federal government consulting for about 10 years before joining here. I got my original start at Callahan and Associates and just my professional start there. So that's where I learned about credit unions sort of right out of the gate. Excited to bring my federal experience to bear as it pertains to field of membership, LID, CDFI, and I'm very fortunate to work with a group of very smart and determined individuals like Emily, who help our credit union clients succeed every day. With that, I'll turn it over to you, Emily, for an intro about yourself.
Hey everyone, great to connect today. My name is Emily Hughes. I'm an advisory director at CUCollaborate. I oversee our market expansion and analysis service line, and I've helped clients, 150 clients over my time at CUCollaborate, accomplish 200 market expansion engagements. So I like to say that I haven't seen it all, but I've seen quite a bit. I've worked with credit unions of diverse asset size and locations across the country. And prior to CUCollaborate, I worked in the consulting space. So yeah, happy to get into market expansion today. And we can start on our first slide. So when we look at market expansion as credit unions, field of membership is kind of integral to those conversations. And everyone that you have the potential to serve, your total addressable market, this is your credit union's field of membership. When we look at individuals who have a need for your products and services, and then everyone that you eventually end up serving, this number diminishes. So because of that natural attrition, we have really two important takeaways. One is your total addressable market needs to be as broad as possible. You don't want to be limiting yourselves on the field of membership front. And the other nuance is it's important to strategically pursue the right people in your serviceable addressable market. And on the next slide, a metric that we always recommend credit unions take a look at to understand the extent to which their field of membership is restrictive is the average market share of community credit unions nationwide. So if you've captured that average, about 1.5% of your field of membership, we recommend that you should start considering field of membership expansion opportunities because it's increasingly difficult. It's going to be harder and more expensive to find your next new member. If you haven't captured that market share, this is where it's strategically important to develop an understanding of where your next best member is and a plan for targeting how you're going to reach that next best member. So for market expansion, we have a three-step approach. And the first step is determining where to go. This might be within your current field of membership or outside of it, but essentially where you're going is where the members you want to serve are located. The second step of market expansion is figuring out how to get there. And this is where it's important that you have a means to make your next best member eligible to join your credit union. So making sure that that advantageous potential member is in your current FOM or you've got a plan to get them there. And then the last step about assessing impact is taking information about your new members, tracking where they're coming from, and understanding the extent to which your targeted outreach is effective or potentially needs to be tweaked. So again, in the credit union space, market expansion is constrained by field of membership. So I wanted to spend just a few minutes talking about what those constraints look like. So credit unions are chartered at the federal or state level, and those regulators specify how your field of membership looks. So on the next slide, on the federal side of things, there are three different charter types. And on the slide, beneath each of the charter types, we've included how field of membership can be defined. On the state side, your charter and field of membership options really are going to vary state by state. Sometimes states are much more flexible than the federal regulators. Sometimes they mirror the federal regulators' kind of restrictions. We have a lot of webinars where we talk at great length about all the field of membership rules. And today we're not going to get into those details, but I just wanted to give this group a sense for what those rules look like. So this is a list of all of the restrictions on federal charter types in terms of population size, population density, geographical limitations, to really drive home this point that field of membership adds an extra layer of complexity and an additional dimension to market expansion. So across all the credit unions that I've worked with, I have the opportunity to chat with them about how they currently are pursuing market expansions, and from those conversations built an understanding of kind of the standard way, what we hope to make the legacy way of doing market expansion. So typically market expansion starts with local knowledge or expertise or a local instinct. You have a feeling, a gut feeling that things are going a certain way and you want to chase that. Some credit unions will just pursue that instinct. Some credit unions will try and substantiate that instinct with data. If they do so, they're oftentimes pulling large or confusing data sets. They're analyzing those data sets in Excel, which doesn't allow them to really visualize anything. And if they're doing any overlay of field of membership, it often looks like a really awful, just like cluster of tables where you're calculating different county groups or different census tracts to make sure that your desired geographies are falling within federal rules. So basically, something that is overly complex, not really data driven, and very resource intensive on the credit union's teams. In contrast, today we want to talk about what market expansion can look like when enabled and supported by software. So with software, we can get statistically significant insights into what members look like at your credit union, who the members are that you're serving very well. On a single interactive map, we can see bank and credit union data, US Census demographic data, and member data, and overlay these to gain various understandings of potential for growth. And we can automatically calculate and test field of membership scenarios. So instead of drawing these crazy tables and doing a bunch of calculations, you're really easily like pointing and clicking on geographies and quickly seeing the software is calculating your field of membership requirements for you. And then finally, by mapping your own member data, we can visually see like where your new members are coming from. And again, that's going to tell us, hey, is our targeted outreach efforts working, or is there something else that's driving new member growth? So for the rest of the conversation, we're going to be working in CUCollaborate software for a good part of the time, which is hopefully going to be really fun. So the first thing that I want to walk this group through is NCUA's member demographics page. And this is the first step in understanding what your membership looks like and understanding what your credit union does really well. So we can take a look at the breakout of your members by income segments, the age of your members, the extent to which they're speaking a language other than English, what industries they participate in, and a lot of other data points. So I'm going to take over demoing and we can see this live. So for the purposes of today's conversation, we are using dummy data that's not associated with any specific credit union. And what I want to first touch on is what's driving the assessments in our demographics dashboard. And underpinning all of this analysis is your Aries file, which includes a really important data point, and that is your member address. So using the member address, we make a statistically significant guess, matching that address with the most granular US Census data that we have. And that allows us to understand your member demographics as accurately as possible without actually having to survey your members, which isn't really feasible. So to gain an understanding of what your credit union is doing well, we're going to compare this credit union's member data with the demographics of individuals that are proximal to the credit union's branch. And all things being the same, if your credit union isn't like intentionally tailoring outreach or advertising specific products and services to targeted audiences, we should see that the member demographics are matching the demographics of the surrounding communities. And if there's discrepancies, that shows us that the credit union is reaching or serving a specific group really well. So I'm going to go ahead and compare this credit union's demographics with the local population. And we can see the race and ethnic background of members broken out in this visual. The credit union's members are in blue and the surrounding population is in green. Below this graph is a view of languages that members are speaking at home. So nearly 14% are speaking a language other than English. And if we hover over this pie chart, we can see that granular breakout. In this case, nearly 8% of the credit union is speaking Spanish at home. And then each of these tabs include further data visualization. So on the income tab, we're able to calculate the average household income and median household income of credit union members. On this visualization, we can see that the credit union is really adept at serving individuals with higher incomes, those of over $150,000. And this dashboard also shows us some just interesting statistics about poverty and labor force participation. On the housing tab, we see incidents of renting and owning, along with longevity in housing. And complementing that is information on pricing, including those monthly costs for renters versus owners. And could be kind of helpful visuals or insightful in thinking through your mortgage market. The education and health tab gives us visibility into the formal education attainment of your current members, the extent to which they have access and are using computers and internet, the sources of their insurance, the average size of families. So these all kind of accumulate into understanding what your average member looks like and can inform things like marketing strategy or marketing messaging. On the work tab, we see industry participation broken out. So for this credit union, the top industries are education, healthcare, and social assistance, followed by professional, scientific, management, and administrative, and then finally retail, trade. Some background on veteran status, commute time, and mode of commuting as well. And then finally, age. To populate the credit union's age, we require an additional kind of supplemental data field to the Aries file, which is members' date of birth, but this can be another line of sight into modes of communication that are going to resonate with your average member. So a lot of really good information here, and I have one landing slide to help us kind of like retain some of the key takeaways from this. So I'm going to stop sharing so we can just briefly drop back into the slide deck. So what we saw in Analyze CU, the member demographics page, the credit union is effectively serving individuals that speak Spanish. Proportionally, more of the credit union's members are well-to-do, I'll say, and make a high household income. And then the top industries for the credit union include education, healthcare, and social assistance, retail trade, and then professional, scientific, and administrative. So I'm going to sort of like end on that so we can carry forward some of those takeaways in ExpandCU and explore how we bring our insights about our members to the mapping software and identify opportunities. So in ExpandCU, there's kind of like two really important ways that we can use our insights about our current members. I've worked with credit unions where they lean into their strengths. So they're currently serving certain groups really well, and they want to find more of those same members. In contrast, there are some credit unions that have strategic goals which necessitate that they find new members that look different from their current members. So a really good example of this is if this credit union wanted to pursue low income designation, they would need to balance out their high income membership with individuals that are on the more income constrained side of the scale. So ExpandCU can help us find out, where those complementary or matching potential members are. And then we can also draw geographies that capture our desired next member and quickly understand if those are in a compliant field of membership without, again, like having to do all those manual calculations by hand. So with that, we're going to get into ExpandCU, and I'll share my screen again. So back in the CUCollaborate software, I'm going to navigate us to mapping. And to give you the lay of the land here a little bit, this icon, your filtering options here, it's possible to select a map style. This is going to like underpin the visualizations. I prefer light mode because it makes it easier to see data points on the map. And then it's also possible to select various geographic boundaries. Today, we're going to be adding various layers. We're going to be working in credit union data, demographic data, FOM expansion, and LID. And the first thing that I want to do is just map this credit union's branch so that we can zoom in. You can see all the elements that it's possible to map here. One handy thing with branches is including the service area, so you can visualize the kind of like geographic dispersion of individuals who can easily access your branch. And this gives us a little way to zoom in. So the first layer I want to walk you through is demographics. We're just going to go with general demographics for this walkthrough. I'm going to select Census Tract 2020. A census tract is a geographic unit, and it is small enough to give great detail on the map, which is why I'm going to select it. And then we're going to look at that median household income. The first thing that pops up here are the census tract boundaries, and then we get a heat map generated, which shows the median income ranges of each of these individual census tracts. So there's some ability to customize colors and the number of levels that you see on the map. And again, for the purposes of this conversation, we're going to focus on kind of like the blue census tracts or the more well-to-do census tracts, just because they're easier to see. But this same approach is going to hold if you're looking for incomes in a different segment. So what this heat map shows us is census tracts where higher income individuals are living. And in order to kind of like more effectively reach those individuals, a lot of credit unions think in terms of zip codes, or they market in terms of zip codes. So I wanted to show how it's possible to kind of like crosswalk this heat map with zip codes. And we can do it in a couple of different ways. So one is just plotting the zip codes on top of these census tracts. And then as we hover over the map, you can see the zip code populate. Another option is to kind of like circle the census tracts that you're interested in on the map, and the software is going to automatically generate a list of relevant zip codes. To do that, we'll add a layer. We'll go to FOM expansion, community charter, and then we're going to stick with that census tract 2020, add it to the map. This arrow with the circles is your selector tool. So I'm just going to grab that and I'm going to try and draw kind of like a narrow selected map here, which is not, I don't always have success completely eliminating my map, but I just clicked out of some of the census tracts that I'm not as interested in. So what populates here is your targeted geographies. And in the View More tab, we can grab that list of 2020 census tracts and also your overlapping zip codes. So you can see the zip codes that are kind of like fully included in the geography and ones that sort of fall outside of it. And this is because your zip codes and census tracts aren't like a complete geographic equivalent. I also wanted to show, we honed in on census tracts with a higher median income. When I go to selected area details, this is going to generate a profile of the geographies that I targeted. So we've got population, we have information about the financial institutions in the area, and then we have all these additional demographic details. So we honed in or anchored around median income, but the location profile is going to give us so many more insights into what that selected geography looks like, including this detailed list of traditional financial institutions in the location, education, median household income, etc. So a lot of really great information that you can also ascertain about your selected geography. And lastly, I'm going to add in the lid component here. So the lid layer, 2022 is the most recent lid geographies. Lid geographies are designated by the NCUA, and median income is a big driver of whether or not a geography counts as low income designated. So you can see that this sort of like contrasts with the higher income areas that we selected. And if this credit union was pursuing lid, we can actually toggle our map ahead of the lid layer. And I'm just going to dump those higher income areas we selected and go ahead and circle lid qualifying geographies. So kind of a lot of different ways to think through how we're targeting individuals in alignment with kind of strategic goals for a low income designation, or again, doing that next best member fit, finding individuals that reflect your current membership. I'm going to move us to another part of the country. So I actually need to log out and log in as another demo profile. So bear with me while I toggle.
While Emily's doing that, one thing I would just mention is, we're trying to show just like some different ways that you can think about market expansion. And Emily touched on products as well. One thing we've also been asked to sort of like track is like um, next best product fit or things like that. And especially as the industry has gone from sort of like a needing loans position to then needing liquidity with the sort of change in the economic environment. This can be helpful too, not just in sort of like expansion, but focusing in on your current markets and where you might target your outreach efforts based on, do we need deposits? Do we need loans? What types of loans? What types of deposits? As well. And I know we're going to talk a little bit about measuring impact at the end, but other factors to consider. There's a lot of different ways to look at your expansion strategy, and we have a lot of different credit unions that are coming for a myriad of reasons, whether it just be general growth and wanting to, just need more total addressable market to like very finite strategies to, achieve your kind of like financial goals.
Okay, so we're gonna go to Florida now, and I'm gonna map a branch to zoom us in. And I want to demo advanced demographics. So this is a little bit different than general demographics. I'm going to stick with Census Tracts 2020 again for just that granularity. And we'll take a look at language spoken at home. So in this credit union, okay, so for advanced demographics, we need to go ahead and select the geography that we're interested in seeing because there's so much data. This is how we best populate it. So I'm gonna grab the census tracts in these two counties and then map language spoken at home, Spanish. And we can see the various concentrations of individuals that are speaking Spanish at home. If this credit union was looking at expanding into other markets where they similarly can serve individuals that speak Spanish, it's possible now to map potential fields of membership and quickly assess if they are valid. So I'm going to go to community charter and counties and draw a field of membership here. And what you'll see populated in this table here is under conditions, a check mark for which field of membership rules this area complies with. And as you can see, it does not comply. So now we get the fun part of ExpandCU, which is testing different field of membership scenarios. So I'm going to click out of this county, add this county, and we've achieved that single political jurisdiction condition being met. Something else that I wanted to highlight here, one thing that populates in ExpandCU automatically are credit unions serving in the selected area, and those are those orange pinpoints. When I hover over this tooltip, it lists all of those credit unions, so it's possible to kind of get an assessment for who else is in the market and that you are competing against. And I'm gonna take us to a third place in the country. And we're gonna go ahead and again, map that credit union branch to help us zoom in. And take a look at, we're going to stick in Cleveland. So I'm going to add another advanced demographics here. Census Tract 2020 for the extra detail. I'm going to take a look at industries. Again, I'm selecting that geography so we can see the industry breakout. The top graph is overall the proportions for the entire selected area, and then I'm just going to hone in on education, healthcare, and social assistance. And we see a higher concentration of individuals in this industry in these darker blue census tracts in East Cleveland. For this demo, I wanted to talk about how a credit union can draw an underserved area. And I have prepared an underserved area for this demo. Again, I have to toggle out. So appreciate you guys letting me zoom in and out.
Yeah, while Emily does that, underserved areas are one of the more popular field of membership expansion for multiple common bond credit unions, which are we generally see as becoming more prevalent for credit unions as they outgrow their community charter. So the general evolution you will see is like credit unions move from like a single seg or single employer group to a community as they outgrow that seg. And then multiple common bond credit unions are often outgrowing sort of like the presumptive community. So in like the last example, you saw Emily selected like 2 counties, one of which wasn't in like the statistical area. And so at that juncture, a credit union might decide, okay, well, I really want to go into that other county. I can't do that as a community charter, so maybe I'll convert to a federal multiple common bond charter. And then one thing federal multiple common bond charters can do is add what are called underserved areas, which are bizarrely enough, they are communities as well. So these are community roles, even without a community charter. The upside is you can have an unlimited amount of them so long as you can get regulatory approval and meet the requirements. The downside is they're complicated to calculate, and so that's where software is helpful here. And Emily, I'm trusting you'll walk us through that.
Yeah. So in this toolbox again, under the conditions heading, similar to kind of like your standard community, each of these lines represent a test that the underserved area has to pass, as well as this indication here of individuals who come from approved areas. So the rules for an underserved area is that 85% of the population needs to come from qualifying geographies. There has to be fewer financial institutions in the underserved area compared to the area overall. You have to meet a community definition, and your credit union also has to have a branch in the area. So this first test here is counting that you have an appropriate number of underserved geographies in your map. So we're seeing a little over 85% of the population in this purple shaded area qualifying as underserved. The map shading speaks to those geographies that are qualifying versus not. It's a little complex, but it gives you an opportunity to kind of like test underserved area solutions. So the red census tracts are going to count against this test because these are well-to-do areas. And when I select this census tract, my clicker, it's going to bump this test to gray, showing that the map no longer qualifies as an underserved area. So I'm going to deselect it so that we can continue to use this as an underserved area. The concentration of facilities test is passed, so we get a green check mark there. And then also the area has a population size and a geographical constraint to count as a portion of a statistical area. So we've got that green check mark there. As you can see, like something that's also very advantageous with underserved area maps is when we mapped, when we overlaid the industry, we could see that some of your census tracts with the highest population of that targeted industry of education fell into some of these census tracts outlined in yellow. These are more like well-to-do areas, so these are falling into that 15% threshold. But because we're expanding the underserved area to capture less well-to-do areas, that's giving us an opportunity to serve kind of both populations and target that industry that was a match for our current membership. The next thing that I want to look at is measuring impact, and I have to again toggle for that, so I'm again going to stop sharing. I'm going to stick with our underserved area, and I'm going to add a layer here mapping credit union members just to show how this feature works. So adding member location to the map, we can, as Chris mentioned, we can filter this by the specific product that members have. And we can also filter this by date to hone in on where new members are coming from. So adding this to the map, we can see the extent to which our new members are falling, within that underserved area that we pursued, or are located kind of beyond the boundaries of that underserved area. They're funding our credit union, via other initiatives, and are being memberized through other routes. But again, what's interesting here is you do see members that have been attained that kind of like fall outside of that concentration of, what we thought was a good potential member match. So giving us some insight or food for thought as to the extent to which, we're appropriately or effectively targeting, teachers, for instance, who fall into that industry. That is everything I have prepped for the demo. So I think we have a final slide just to bring everything home, and we can end the toggling once and for all. So the approach, again, that we recommend for market expansion is determining where to go, figuring out how to get there, and then measuring impact. And software can help you achieve these 3 steps really effectively. So the first step, determining where to go, you're using statistically significant insights about who your members are to figure out the markets that you're serving effectively or the markets that you need to expand into. In the next step, figuring out how to get there, you're able to map the demographics that it's like a counterpoint to your member demographics, see that visualized on a map, and then draw potential field of membership scenarios to capture the areas where those members that you want to target reside, and quickly assess the extent to which they're in compliance with field of membership rules. And then measuring impact, you can quickly map your most recent members and kind of keep track of where they're coming from, and the efficacy of your outreach efforts to your strategic targets. So again, really glad to bring these insights to you. Please follow up, I'd love to have conversations with you about some of the market expansion challenges that you're facing. Chris quickly blew past our proof points here. We have the majority of approved market expansions, especially with underserved areas, 100% success record. My team sticks with you through the approval process. That's something we're exceptionally good at and is very valuable to our members. And as a champion of credit union growth, we're always proud of how much bigger our expansions are compared to average expansions. And this really speaks to our ability to just make a very substantial and strong case for taking credit for the work that your credit union does to serve people that really need access to credit union products and services.
Yeah, I think one thing I would emphasize there too is, we not, as we discussed, sort of like not all market expansions require a field of membership change or expansion. But if it does, that's a project, and you're already very busy running your credit union. And what's important too about that 257% larger is not that bigger is always better necessarily. Like remaining focused on who you serve well and where you're going to serve is really important. The regulators also need to know that you have the ability to serve a market. But software really comes to bear there as well, in that, especially if you're looking at underserved area where it's very difficult to calculate, you want to make sure that you've got enough room to grow, not just next year, but in the next 5 to 10 years, and that you're not having to continuously go back for additional growth if it is geographic expansion. Obviously, SEG or sort of business development or SEG growth can happen on a sort of recurring or regular basis. But we always want to make sure that when we're planning, we're having that longer term vision and we're getting you enough room to grow so that you can remain focused on sort of the day to day and not have to continually grow sort of your geographical boundaries as well. I don't think I saw any questions come in the Q&A, but if there are some, please feel free to post them now.
There is a question in the Q&A and one
Okay.
in the chat. If you're unable to view it, I'm happy to read it off.
That would be awesome. Thank you, Phyllis. I think my sharing
In the chat, Jenna Sweeney asks, what if we're considering moving and or opening a second branch in the same county or zip code that is quickly growing? Could the software help with that?
Yes. So one of the things that we didn't demo, it's such a new feature, is the branch market model assessment. This allows you to capture geographies that you're considering expanding into and see a branch market model score that takes into account various like population trends, so like population growth, but also importantly can make estimates about potential for deposit growth, which we have found is like a key indicator of branch success. So you can get kind of like a heat map of where are the census tracts that are going to be like the best neighborhoods to go into. On a like less sophisticated angle, it's also possible to map both credit union and bank branches to get sort of like a sense for who's where. We don't have any kind of like overlay of like real estate.
Listing,
we can't tell you like the plot of land to go to, but we can help you target a neighborhood that would be in a data-driven way, has a good score for potential for growth.
Yeah, and what we did is to support that sort of like score or that weighted score. What's under that is we analyzed over the last 20 years, specifically the most publicly rich data source is bank branch data, or FDIC data. Banks need to assign actual deposits to their branches in a way that credit unions don't on their call report. And then we looked at which of those branches sort of grew faster than the other branches in the similar market and like what market conditions were statistically prevalent, and then boiled that down into like a score. Again, this is focused on deposits. Not all branches are deposit, some are more loan driven. Additionally, we've talked to credit unions with branching strategies that are like, I'm just going to say like alternative strategic priorities, like retaining your CDFI or low income designation. So there's a lot of different sort of like reasons you would open a branch, but we're trying to build in some of those, at least from like a deposit perspective, some heat mapping, and again, like just to reiterate where we're different, or sort of like we would focus. We're not a site selection, we're not a design build firm. But trying to, where we do work with credit unions is more on like the market or regional level. And so just getting an idea of kind of like what parts of an area, might I look in, and then you may partner with like a realtor or a design build firm. So yeah, hopefully that answers your question, Jen, at least a little bit. Also happy to walk you through. There's a link on the Q&A here. Feel free to you can book a meeting and we can talk more specifically. We also have some like research projects that are more bespoke, less software, but like speak to like optimization too. We have a lot of credit unions who are just like, is my existing branch footprint optimal? Where might you recommend adding more or consolidating or shifting? So a lot of good discussions on the branching side, especially as credit unions on the whole continue to increase our branch count while banks kind of decrease. So there's also that other element of like, who's selling, or is there a piece of real estate that's coming up from a bank that's potentially vacating that you can go purchase.
And then another good question we have as well. Does ExpandCU have the functionality to check whether different SEGs are already served by a credit union?
Yes, we can look at it preliminarily, although I would say my team as a whole can help you do that as well. We would probably do some research outside of the data repository in the software. But there's a really cool field of membership search functionality in the software that allows you to, like enter the name of the SEG or any other group and see the extent to which it comes up in searches of fields of membership. So
yeah, we regularly submit Freedom of Information Act and then the state equivalent of that for all credit unions charters. And then from those build a structured database of every credit union's field of membership in the country. And that's essentially like what we would be querying for, whether they're served or not. I would say too, while a lot of credit unions have really great seg strategies, others, I think I would caveat like how well or how deep that relationship potentially is. I think what we find is that some credit unions also have legacy segs that don't have as close of a relationship with anymore, and or have potentially moved. So other important considerations if you're just looking at sort of potential overlaps or whether there's an opportunity to be sort of like a net new credit union relationship. But yeah, really good question.
I think that's it for the questions.
Awesome. Thank you, fellas. Thank you for those questions. Those are good questions. I think our last slide here is just like a upcoming or preview. So early Thursday we'll be, I'm sorry, excuse me, early April, we'll be talking about low income designation, something we demoed a little bit here in terms of like market expansion. This webinar will be focused on what are the benefits of low income designation strategy and how you could either retain, attain that NCUA regulatory relief designation, and just sort of like what's the ROI on the various reasons or sort of opportunities that unlocks. So and again, an area of expertise that we're passionate about. We really see this as optimizing sort of like your regulatory environment or your infrastructure for growth, accepting non-member deposits, using sub-debt for boosting your regulatory net worth, acquiring banks, all sorts of things that low income designation can help with. So always excited to share our knowledge there. And I think that's everything for today. So thank you all. Thank you, Emily, for the great toggling in the demo. I appreciate it. Thanks for the good questions. And again, yeah, feel free to reach out if you have specific things you'd like to talk one-on-one with us about. Always excited to hear what challenges you all are facing, how we can support, and yeah, excited to continue to be part of the growing movement. Thanks, everybody.
Bye.